Good morning, everyone. Tradingology.com, trading room for September 15th, 2020. As always, we'll get the doors open, see how you guys are doing this fine Tuesday. Speakers are up, we're good to rock. Internals took a little turn down, but we're right around that zero line again on the volume. It's not the bad reporting like yesterday, but we are hovering around zero. We got a little topic we want to talk about today. I think it's going to help a few guys. I know, I think there's some roller coaster action happening, and I think I might be onto what's going to help people straighten things out and just get some good goals and future perspective. Maybe not perspective, but just future planning. Good morning, BD. Good morning, Andre.
Morning, guys.
Hey, there's Dave. Good to see you.
Sneezing this morning.
The allergies are coming to get you.
Yeah, I can feel autumn coming and the cold weather. We went down to 40 last night.
Woof. Time to blow out the sprinkler systems before the ground freezes.
Yep.
All right. So I closed my VXX trade this morning. I don't know if you're still holding yours, but I got to a profit where I was comfortable, and I said, that's good for me.
No, I closed it out too. I thought it was a good time to go, and we've got a new one coming up tomorrow, so I'm happy with that.
I know we had another trader close his out yesterday for similar profit targets where, yeah, never a wrong time to pull profits off the table.
Absolutely. And, as you guys seen now, we've traded it for now, it's been a couple months, at least 6 weeks or so. It's been fairly consistent. So yeah, I hope you're liking it.
Even in some volatility, that's for sure.
Yes.
That is the key. Well, the one topic I wanted to definitely bring on to, I just mentioned to Dave shortly, is around profit goals is what I want to talk about today. So Dave actually has no idea what I put together, so this will be interesting.
I'm going to be just as excited as everyone else to see this.
So I have noticed, and I've went through this in my trading career as well, so it's not like I'm just saying, hey, this is what you guys are doing wrong or this is what you need to do better. This is based on what I've personally went through. So I'm going to pull over this spreadsheet I put together. It's got a lot of math to it on the second tab you'll see, but just some high level I want to cover. And just around trading too, between micros and E-minis, and I think what I have found. So here I have to put together, some profit goals, what people might look at. Everyone always wants to talk about, I want to make $10,000 a month, right? Well, I have no idea what that actually takes. It just sounds really good. Advertisers use it for headlines. I think it's overused and overhyped, but it is something that people want to look at. So I can spell a month properly, update that as I fly here. But if that's a real thing, yeah, there's absolutely a way you can make that happen. So I just put together a few different scenarios here for 50, 500. You see the numbers and what account size I would personally do if I were looking for those goals, and then what type of risk you never want to have on in one trade at any given time. So, and I think anything below $10,000 account where you're making around $1,000 a month is a good goal, because what I have seen personally, what I've seen from other traders, is if you start to make more than 10% returns on your trades in a month, you are absolutely subject to large drawdowns, which will and most likely happen just because you may be over trading, you're trading above the risk profile, which you should be at, you're risking more than that 1% of your account per trade, and that's where bad things happen. Yeah, that's the roller coaster is fun, right? You're going up and down and it's exciting, and suddenly you make $2,000 in a day, but the next day you lose 4,000. That's not fun either. So I think this will help. It helped me ground myself to where it was play by the rules, do what you're supposed to do. Then as you graduate your account up from that 10 and into the $20,000 range, is that where you can move from the micros to the full E-mini contracts. I think it's very important because it's too easy today. I've seen with what leverage is available and what margin requirements brokers are doing now, where you can get into account and you can actually trade an E-mini with like $1,000 account, which I believe is wrong, in my opinion, because it's too easy for you to take that drawdown. Like if we look at today, if you're trading one account on this and you're in one contract and you lose that, your position will probably be closed because you don't have enough margin. Then you're going to be like, hey, what the hell? You taught me bad stuff. So I think that's one risk that a lot of traders have, is they're going too big too soon and they're on that roller coaster and it's fun. Yes, profits are great, but I think you have to, so what I would do is if you hit a 10% return in a month, stop trading, take the rest of that month off, and then come back the next month and just rinse and repeat, or just paper trade. If you really need, just do the muscle memory and click in the buttons, stick to a paper account, don't trade real money anymore. Because what you will see is if you can do 10% month over month over month, you're going to see some magic happen over time. And then same thing goes for when you get up to the 25, 50, 100, that's where you can say, yeah, okay, you need to make $10,000 a month because you want to replace your income. This is what it's going to take. It's going to take a 6-figure account, and and if you make $1,000 or so, now you're risking only 1,000 per trade instead of, you're losing 1,000 trading this $5,000 account. That's crazy. That's what's going to happen when you get blown up. And I'll pause there and see if Dave has any thoughts on what I've got so far.
No, that's really a good reminder of how important it is to trade small and risk on each trade small, because here's what happens, especially if you have, let's say you start out with a $5,000 account, and instead of trading the micro E-minis, you're trading the E-minis. Well, it's pretty easy to lose a couple of trades and be down $2,500 pretty quick. Well, what happens if you've got a $5,000 account, you trade down to $2,500? You have to make 100% return just to get back to 5,000.
Right. It goes really fast and it's very slow it's like the market. It goes down with the elevator and it goes up in the little stair steps.
That's right. So trading small and trading, I would say, and I think you're absolutely right about the 10% profit targets, because, or 10% profits within 1 month, you kind of need to step away a little bit. I typically do anywhere between 4 and 6% a month. And so at that point, it's like, okay, I'm trying to be as consistent as I possibly can, but I trade small, but I trade frequently in order to generate those kind of returns. Like you see, I'm trading every single week on the VXX system. And I'm also doing some other small trades. I'm selling naked options, but I'm only doing like 1 or 2 contracts on those. So I trade frequently, but I trade very, very small. Wait till those volatility comes in, and I take them off. So I'm kind of like a little, I'm going through the blueberry patch, and I'm just picking off the blueberries.
Yep, I was going to say another one is be like the mouse stealing the cheese, just a little bit of cheese every time. You don't take the whole chunk, you just take a little bite, or else the trap's going to get you.
That's absolutely right, because if I take a big chunk, the owner's going to know that I'm eating that cheese. If I take little bites off, then he doesn't notice.
Exactly.
Come back and keep picking at it. So this is really important stuff, guys. Hope you pay attention. Now, how about, when volatility comes into the picture, when it's more volatile, do you trade smaller sizes? Do you trade less frequently? Do you trade more frequently? How do you handle that?
I have personally traded shorter trades. And what I mean by that is I'm in and I'm out quicker. So I'm quicker to take my profits, but I don't wait for as long. Like you guys say, when I originally released the MES class, we were easily getting 5, 10, 15. Sometimes that thing would run for 25, 30% under those large volatility times. I still stopped at 5, 10, or 15. And then when things slow down, I'm taking profits at 2.5 points, 5 points, 7.5. So you have to adjust by what the waters are doing. So I'll be in and out quicker than normal versus, maybe a couple days swing trade. There are opportunities for both, but that comes down to, again, sizing and positioning and what you can hold overnight. Maybe the micros are much easier to do that overnight, where you can ride the waves because you could have a big drawdown and you want to be able to not hit that 1% level and be at a trade potential for closing out when you don't want it to. So I would say the short answer is I'm in and out quicker is what I personally do.
So it's a time. So it's a time in the trade, which is actually shortened based on expanded volatility. I think that's a great rule.
Absolutely. Then I know what you guys are probably saying. You're saying 10% is a joke. You know, you guys can do a lot more than that. Check out this tab. If you don't like 10%, we'll just start with $1,000 uh, just for easy math. And we'll put in the 10% return in a month. Whoops, not 1,000. 1,000's a lot. Why doesn't it want me to put 10 in? Broke my cells already. What's going on here?
You got to do, yeah. What's going on?
10. Weird.
Just put 1 in. Let's see if it goes to 10. It looks like it's multiplying by a 0.1. Put 0.1 in then.
How did that happen? That's really interesting.
I think it's the formula. But anyway.
All right. So what we got here is, and obviously I don't expect you to be a robot and always hit 10% every month. This is just to show you what a 10% return will do over time. And this is starting with $1,000 account. And I've swizzled this so you can actually add it. So if you wanted to put in a little bit more money every month, you could add it, but we'll just compare it with one initial $1,000 account starting, where obviously you would be trading the E-minis and you'd be looking at, you know, a $10 risk per trade on those E-minis, and you might be making $100 a month. So that's 10%. So at 10%, after month 1, you're at 110. You do that consistently for 1 year, you're taking that $1,000 account and you've made it 2853 on top. So that's more than almost tripled your account at 10%. So that's 120 in a year. You guys might say, hey, I want to take 5, I want to take 10 or whatever. This is just going to show some of the math. $1,000 account started. So year 2, we just continue. We're now at almost 10,000. Year 3, 30. Year 4, this expands down to, I think it's 8 years I went to, or actually 10 years I went down to. $84 million. And again, I don't expect you to hit 10% every month, but people say, hey, I can make 50% a year. I can make 100% in a month. That's what I want. Well, look at what the power of just only 10% does. That's ridiculous. And that's just math. Say we took that $1,000 and said, yep, I got $100 to spare. I'm going to add to that account every month. Just $100. Look at how much that changes just the first year. We went from 3 to 4,700 because the magic of 10%.
Yeah, exactly. Well, the compounding is that as the account size grows from the previous 10%, you're adding another 10% to that new balance. Right. So that's compounding the gains at least.
True, yes.
Yeah. So yeah, that's really powerful stuff. Einstein said compounding was the eighth wonder of the world or something.
Right. And again, I don't expect you guys to do this, even if you said, hey, Dan, I went out, did this and I made, but think about it if you did this and you said, hey, I made 10% this month and you stopped and you weren't at a stress level, worried to find a trade, worried about volatility, worried about it going against you. You came back later and the next month you made another 10% because you found a strategy that's repeatable. You follow the rules and it just starts to work like clockwork. You just repeat this. So this isn't if you're looking for income replacement, right? This is we're building for a goal. And what we've always talked about is we're trying to preserve our purchasing power. And you're not going to you can't even get 2% in a bank, right? If you open a savings account. If you're talking 10% in a month, nothing touches that anywhere except for ultra risk something. You know, whatever.
No, you can't get it. I mean, the only place I know you can get 10% risk-free, sort of risk-free, is maybe in Costa Rica. I think they have 10% savings rates.
Sure. It makes sense. Even if you go less, to say, okay, maybe 10's not, let's go less. Let's go 5%. I got to do 0.5.
0.05.
Even that adds up over time. And you say, Dan, I got more than $1,000. I got 10 grand, but I want only less percentage. So we'll go half the return at 10x the account, because I think there's a lot of traders out there that can start with a $10,000 account. Maybe not everybody, but there's absolutely some that do. So if you take that and only a 5% return a month now, still very feasible, and still 12 times 5, 60% in a year. 60% returns in a year. After 1 year, we're almost doubled. 2 years, tripled. 3 years, we're at 60. 100 after 4 years. After 4 years of trading, 5% monthly returns, you've 10x an account. Boring, simple trading. Multiply that out to 10 years, and you're at $3.5 million.
Now, the assumption here is that you're very consistent with your strategy.
Yes. Yeah, again, so you're going to have losers, you're going to have winners, but that's not saying you're going to have 100% trading. I don't want to pretend that that's what I'm expecting you guys to do, to say, yep, you've hit this. But, when you're making, so if you get down 3% in a month, maybe you take it down, or whatever your rules are for your strategy. As long as you're not risking more than that 1% of your capital. So say you had a down month where you, instead of being up 5 or up 10, you went down because your loss was the same. You take that month off. You hit your stop loss for the month. Then you come back. So as long as you have a sound strategy that has more winners than losers, you are going to win over time. I appreciate that, BD. Andre says, how do you feel about scaling the same 2 strategies all the way, or would you want to add strategies? I would say you can vary that. This, particularly when I'm talking about here in the basics with the profits and the targets, is specifically around futures trading. I have found where people get on that roller coaster too fast and they enjoy it and they get hooked. It's like a drug. They see that big profit and they say, I love this. I want to do more of this. And it's a double-edged sword. Whereas you make too much too soon, you will lose it. I can almost guarantee it. Unless you put the reins on and you say, I've hit my profit goal, I'm going to walk away. If you can't walk away, that's where you paper trade. I think that's what's going on here, because I've seen too many people get in this boat. If you start talking like the VXX stuff that has much less volatility, or your longer term things, I would say that's additive to what we're looking at here. You could keep that separated, in my opinion. But you still don't want to be risking more than 1% on any trade for your account at any time, if that makes sense. And I'm sure there's something I'm missing I wanted to get across, because I was trying to think I was going to walk through this today to make sure I got all the info I wanted to put together.
So the trading account size between micro E-minis and then going to E-minis, so that $10,000 account you think is a good transition to the E-minis?
Yeah, I think if you were to start with a $10,000 account, I would say, and you started doing, we'll just stick at the 5% here. Maybe once you trip past the 15 and you're halfway to 20, 25, then you could start dabbling in the micros. I could think about that. Maybe there's also a case being made where once you get to 25, maybe then you can graduate. Might not be a bad place to be into. That's probably the safer area.
Yeah, because what's the margin on a ES contract now? It's like 8,000 or something.
Right. So yeah, you're probably much safer waiting. Take this 10 and grow it to 25. Once you get to the 25, then you can graduate to the full contracts. Thank you, Andre. Appreciate that. BD says this is going to help me reset my attitude, approach, and expectations. Good. That's what I'm hoping. I'm hoping to help guys, because I've had a few people reach out to me saying, Dan, what's going on? I'm not consistent anymore. I was great for months, and now I fell off a cliff. What's going on? So I was trying to come back and look and give them some help as to what might be the clue. So I went back and remembered what I used to do. And yeah, I'd love it. Hey, I took, a $200 or a $5,000 account and ran it up to 15. And I know I showed some of that, and maybe I shouldn't have in the MES class, but I wanted to show the power of the strategy. This is probably reining in the expectations of what you should just as an overall trader. So I apologize if I've made people think that they should be able to turn 5 into 25 every 2 months. I just wanted to show the capabilities of what the strategy can do. So that could be my bad on that as I learn through this evolution.
Well, there's also the idea that once you hit like a big profit, let's say you do on one trade, you make a big profit all of a sudden, that's going to be psychologically very difficult for you to handle. And that's why we typically there's a reversion to the mean. So you think you know more than the market does. And you get kind of confident in your ability to start trading. And it happens to everybody. It happens to me, it happens to you, it happens to everybody. It's after those big runs, those big profits, that you do need to kind of back off a little bit and then start small again. Maybe you took a bigger than normal trade in order to generate those bigger profits. That's the time to come back.
Yeah, I would say that's another good strategy too, is if that does happen and you just have like a trailing stop and it just runs and you get a multi-$1,000 trade and you're on top of the world, pull that out of your account, withdraw it, put it back to whatever it was before you made that trade. Just lock that up and make it not even available, I would say would be very beneficial. Like say you're trading a $10,000 account and you suddenly get a $2,000 winner where you're only looking for, $100 or $1,000 a month, and you suddenly make a trade for $2,000 because it just went your way and you rode the trailing stop. Pull that back out and keep that to whatever it was the day before that trade.
That's a great suggestion, actually, because if you got that extra 2,000 in your account, you think that's the market's money. It's not. It's not real money, but it is. And if you go back to 10,000, you take that 2,000 out, then you realize that you're constrained by your principal balance.
Yep, it's that gambler's attitude is I'm playing with the house money now.
House money, yeah, that's right. Absolutely. Good stuff. Good stuff, man.
So I hope that helps you guys. BD says it bit me in the butt over aggressive after some winners. Absolutely. I know exactly what you're talking about, BD, so I appreciate you sharing.
So do I. Everybody knows it. It's part of human nature, I think.
Yep. So the more I can share and the more I can help you guys avoid some of this, or just a reset to say, okay, yeah, this happened. How do I fix it? I think this will help a lot of guys fix it. Get back to what you should be looking for and expectations. And yes, I can put this together. I will put it in the trader resources in our members area for download. I'll clean it up a little bit and I'll make sure this formula is working the way we expect it to. So I appreciate your guys' time, and didn't even look at what was going on with the market. So sometimes it's nice to take your mind off it.
Just up a little bit, but so is the VXX. And interestingly enough, gold and silver are down a little bit. Yes, they are. Big winner today is the NQ, up 1.18%.
Yeah, it was really up. It was just ignoring everybody else at the open. It was just running, and everybody else was kind of stalling.
And then it completely reversed.
Oh, shout out to Steve. He sent me an email saying, hey, I got a toss ticker for you guys that's working for the Dixie for me. So I'll throw this in the chat for you. I threw it on my system here. :IFUS. Looks like it's working for toss for tracking the Dixie.
Oh, yeah. Yeah, good. Good. No oddball looking bars in there.
Right. So thank you, Steve. Appreciate it. And I think that'll just about wrap it for today, unless you guys got some questions. That's my words of wisdom for today.
Good stuff, Dan.
Thank you, sir. I appreciate that. And what is going on here? Oh, I moved the Dixie up there. I was like, what happened to the internals?
Yeah, internals are just kind of so sideways.
Yeah, a little drop in the morning, coming back a little bit.
Yeah. Well, at least we didn't have what we had yesterday. It looked like I think it was a data issue though. But
yeah, for sure.
It was very strange looking.
Yeah, after we had closed up shop yesterday, if you guys didn't miss this, look at what happened to the internals right after we closed the trading room. It just wham.
Yeah,
we either have a data problem or we're really going to the moon.
They hit one button, they forgot to hit the other one.
That was crazy. All right, gentlemen, we'll catch you on Wednesday, and as always, email us with questions. Thank you, BD. I appreciate it. Thanks, Curtis.
Thanks, Curtis. BD, Andre, Steven. Looks like we got Curtis. We got quite a few people. Jeff.
Decent turnout.
Nice. All right, guys. Have a great day. We'll see you tomorrow. We'll talk about implied volatility.
Sounds good, everyone.
Take care.
Bye.